Let's begin. A very good afternoon and a good evening to all of you, all the participants of this webinar on Social Stock Exchange First Impression. Very glad and happy to be bringing this edition before you. And we're happy that you all have joined and still people are joining. On behalf of Financial Management Service Foundation and DevPro India Donates, a movement to change lives. Here we are once again in bringing a webinar, which is going to be a very impactful and very significant in our journey. My name is Dr. Sanjay Patra. Along with my co-panelists and my colleagues, I would like to give you a very special welcome to this webinar. Well, let me introduce my panelists, esteemed panelists. To you, we have Dr. Manoj Fogla, needs no introduction, no name in the sector, and probably the final reference point for legal issues in the sector today. And we are very happy and delighted that he has joined us right now. And we also have Mr. Suresh Kejriwal, a brilliant legal mind in terms of analysis, interpretation, and presentation of many, many years of experience. We also have Mr. Sandeep Sharma, my colleague, a thought leader, a renowned social and technical expert, and we are the panelists for this evening of 1 hour. And FMSF, as well as India Donates, we have been in the forefront of disseminating information which are important for this sector. And today, what we're going to discuss would probably redefine the charity landscape of our country. As you log in, I still see people logging in. We have about 900 registrations and still counting. And we are also live on Facebook. So maybe people are watching on Facebook, or you can also ask some people to watch on Facebook if you'd like to. The chat box, please write your questions in the chat box if you have, and we'll try to pick up. We have a very short time of just 1 hour. And what we're going to do is, like we said, webinar on Social Stock Exchange First Impression, meaning that we are going to give you a technical analysis of these notifications which have come. You know, I'm told that India joins the August group of Brazil, Portugal, South Africa, Jamaica, United Kingdom, Canada, and Singapore in having a social stock exchange. Quite a feat. Of course, the functional models are Jamaica, Singapore, Britain, and Canada. So this is something that is going to be very impactful, probably changing the landscape of our country in terms of charity. So how it will work? Wait as we unfold over our discussions today. Well, one thing is very sure. The classic charity model is changing. You know, there used to be a donor, there used to be a donation, there used to be a recipient. That was the model all these years. Probably a layer here and there, maybe NGO was one layer and there's a back donor, another layer or few more layers. But maybe things are changing, terminologies are changing. You know, donation, now we're talking about securities, stocks. NGO, nobody understood. Some said NGO, some said NPO, some said VO, some said development organizations, NGDOs and all that. Now there's a new term called social enterprise. We'll understand what is it. It's going to be very interesting. And then there will be trading. What will be traded and how they're going to be traded. And then there is something called impact. We used to give money and forget. Not anymore. There's going to be impact. And impact will be probably measured, presented, traded. So what is the value proposition in all this? all these questions need answers. We may not have all the answers probably at this stage because things are still unfolding. What we are going to do is we are limiting ourselves to the notifications that have been issued, and hurriedly we have come up with our technical analysis as we always do. Well, we need to get going since time is short. The format will be that our colleague, Mr. Suresh Kejriwal, is going to present few issues, followed by a round of question and answer. My colleague, Mr. Sandeep Sharma, is going to anchor the question and answer session. Dr. Fogla, as the expert, is going to respond to some of the questions. And the chat box questions, my colleagues are collating and probably they'll be picked up. So here we are, ready to go. And again, a very warm welcome and over to Mr. Suresh Kejriwal. Suresh ji, you are muted.
Thank you, Sanjay ji, for setting the tone for today's discussion and inviting me to carry the process on to understand the thing which was at the first sight or the first stage was thinking it is not possible, because the word is exchange, social stock exchange, and we always feel in the NGO it is a one-way communication. Donor give fund to NPO, NPO give funds to the beneficiaries, and no one is expecting anything in return. So we never have an exchange concept in our NGO functionalities. But the world started with stock exchange, the social stock exchange. That means there has to be some exchange. And so it was very, very interesting concept. But again, Sanjay ji has rightly mentioned that it is just unfolding. Some of the amendments have come. Many more are still to become. So we will basically prepare our presentation on the basis of what has been unfolded so far. And that too, by way of amendment, effective from 5th of July of this month, of 5th of July. And to take that process and sharing my presentation, मेरा तो शेयर नहीं हो रहा है.
Suresh ji, otherwise I will share.
नहीं मुझे तो शेयर तो होता है हमेशा.
No, you have shared a wrong screen actually.
हाँ तो उसको स्टॉप करता हूँ मैं. मेरे स्क्रीन में जा नहीं पा रहा हूँ. एक मिनट.
Shall I share?
ना मेरा शेयर होने से बेटर रहेगा. है क्या?
Yes.
So basically, to begin with, I am just telling you what we are going to discuss today. We will first discuss what is stock exchange and what is social stock exchange, a very, very conceptual level. Then we will discuss with you the roadmap to the journey of social stock exchange at this stage, and what are the action after the regulatory framework being formulated by SEBI on its meeting on 10th February 22. That means action points started only on 10th February 22. And then I will discuss the key points of the 3 amendments made by SEBI effective from 25th of July. And this will cover the meaning of social enterprise, when an organization can be defined to be a social enterprise eligible to raise funds. When can a social enterprise can be identified as a social enterprise for the purpose of SSC and exclusions thereof? What are the registration formalities for NPO to be identified as SC? And what are the fundraising instruments which are so far specified by SEBI, and obligation of NPO towards disclosure requirement, and the social venture fund coming to social impact funds? And for this presentation, we have designed that in the part 1, we will discuss the roadmap to the journey of social stock exchange and the concept of social enterprise. And in this section, I will share the key concept, and this will be followed by discussion on the emerging issues. Then part 2 will be requirement of registration. Part 3 would be means of funding, and part 4 would be obligation of disclosure and social impact funds. And at the end, we will take up your question and answer session on the issues, if any. So now to begin with, what is social stock exchange and what is stock exchange? As we all know, stock exchange is exchange, place of exchange where stockbroker and traders buy and sell securities, share, bond, or any other financial instrument. Presently, Bombay Stock Exchange and National Stock Exchange are the key stock exchange in India. And in a stock exchange, securities are listed and not the company. The company as such is not listed, but the company's shares or company's debt instruments are listed. So basically, securities are listed in the stock exchange. But social stock exchange, the idea of social stock exchange is first referred by our Honorable Finance Minister through her budget speech of 1920. And as per her speech, the object of social stock exchange was to take the capital market to the masses, specifically organizations working towards social welfare in order to make it easier for them to raise funds. So basically, intent of SSC, as directly communicated by our Finance Minister, that enabling the NGOs who are working for the masses to raise funds so that they can implement their program. Now, the SEBI has also notified the meaning of social stock exchange as per the latest notification. And as per the definition, the social stock exchange means a separate segment of a recognized stock exchange. Separate segment means under BSE or NSE, there will be a separate segment, and that will call the social stock exchange. There is no new social stock exchange going to be incorporated. Within the existing stock exchange, a separate segment will be there. And which stock exchange? Having a nationwide trading terminals. So I think under this background, only NSE and BSE are eligible. So under NSE and BSE, there will be a separate terminal for the social stock exchange. And SEBI will constitute a governing council meeting, a governing council body, how the governing council of the SSC board can be constituted. Now the roadmap to the journey of social stock exchange, how it started and where we are today. At the discussion framework level, it started with the Union Budget 1920 when the Finance Minister has referred this concept and idea. This was followed by constitution of a working group on 19 September 19, and this group given a report on the working group on 1st June 20, and that was put on public domain. And at that time, we have had a consultation on this group report and given our feedback how this can be moved forward. Now, based upon this report, then another group of technical called the technical group was constituted on 21st September 20 to analyze the things on a technical perspective. Then technical group has given his report on 6th May 21. And from there, the regulatory framework for stock exchange have been formulated, including therein the final action point by SEBI on its meeting on 10th February 22. So basically all this discussion and framework level, the work started in 1920 and ended in 10th February 22 with a final action point. Now, what are the action level? What are the action taken so far? So after this regulatory framework, on 10th February 22, various amendments have been proposed under various laws, which have been given advice by the technical group committee and adopted by the SEBI in its meeting dated 10th February 22. Then amendment has already been passed with effect from 25th July 22, and this includes the SEBI issue of capital disclosure requirement regulation, amending the listing of obligation and disclosure requirement, and amending the SEBI alternate investment fund regulations. So these three regulations have been notified to be effective from 25th July, and basically today we shall be dealing with these three amendments only. And through this regulatory framework, they have also approached to the Institute of Chartered Accountants of India and NISM for the social auditor and who will audit the social impact. They have also approached the Ministry of Company Affairs for CSR-related recommendations. They have also approached Department of Revenue for tax-related recommendations, and they have also approached Home Ministry clarifying on Rule 4 of FCRA 2011, because everything they are saying has become security, not a donation. And security is basically, the group thought it is covered under Rule 4 of FCRA 2011. So Home Ministry in this case has, the working group has in this case has approached the Home Ministry only to clarify Rule 4 of FCRA because it deals with securities. And again, NABARD and SIDBI has been approached to constitute a capacity building fund to have an enabling environment for a transition of all the NGOs to the social stock exchange. So these are the actions being taken. And now we will deal upon with the amendments made by SEBI on 25th July 22. Now again, the board has already approached the Ministry of Company Affairs, Ministry of Revenue, Income Tax Department, and also approached the Home Ministry for FCRA regulations, but they have not approached till date separately on the GST front. But at the same time, the concept of social return is there, the impact-based funding is there. So I understand that the clarity on the GST front is also very much required, whether such transactions will be under GST or not. Now, first we understand what is the meaning of social enterprises and when can a social enterprise, when can an NPO or profit sector can be called as a social enterprises as per the regulations notified by the SEBI. Meaning of social enterprise. The social enterprise is defined by SEBI as a non-profit organization, and also it will include for-profit social enterprise. That means social enterprise will include both the things, non-profit organization as well as for-profit social enterprise. For non-profit organizations, they have covered a charitable trust registered under Indian Trust Act, a charitable trust registered under the Public Trust Statute of the relevant state, a charitable society registered under the Societies Registration Act 1860, a company incorporated under Section 8 of the Companies Act, and any other entity as may be specified by the board. So basically, all the legal form of NPOs are covered within the definition of NPO, which comprises a social enterprise. Now, for profit enterprise, the for-profit social enterprise means a company or a body corporate operating for profit. They know these enterprise operating for profit, but which is a social enterprise for the purpose of this regulation and does not include a company incorporated under Section 8 of the Companies Act. Now, because companies, Section 8 is covered as an NPO, so they have excluded it under for-profit social enterprise. And at the same time, they are saying, the first condition is you have to have either NPO or for-profit social enterprise. The second condition is you have to meet the eligibility criteria as specified in Chapter 10A. So that means the first criteria is you have to have any of these setup, non-profit, either your trust or a society or a Section 8 company, or you are a for-profit operating for a profit under the Companies Act or a body corporate. And once we satisfy this, then we have to satisfy the another conditions of Chapter 10A. And when we satisfy that condition, then our entities shall be called social enterprise. Not at this stage. Now here just I want to mention that the non-profit organization have been defined as charitable trust registered under Indian Trust Act, but the Indian Trust Act doesn't apply to charitable trust. So this may create some technical issue, which we will discuss on the at the later part of this presentation. Now, what are those eligible conditions under Chapter 10A for making this form of organization to a social enterprise? They are saying an NPO or for-profit social enterprise to be identified as social enterprise shall establish primacy for its social intent. That means they should be established for its social intent. And what are the conditions? And for this, they have given 3 conditions. First condition is they have identified 16 broad eligible activities. As we know, under CSR, we have a Schedule 7. So based upon Schedule 7 and based upon the Millennium Goals, based upon the priority areas identified by NITI Aayog, they have identified 16 broad eligible activities for which an NPO or FCC has to work to qualify as a social enterprise. Second eligibility criteria is that the social enterprise shall target an underserved or less privileged population segment or regions recording lower performance in development priorities of state and central government. That means first condition was out of the 16 broad eligible activities, they have to undertake 1 or 2. Second criteria is they will target underserved or less privileged population or regions which are yet to be, which are having a lower performance in the development priorities of the state and central government database. And the third condition is that the social enterprise shall have at least 60%. That means this 16 broad categories is performed by this for the target population, but this will constitute 60% of their activities. Suppose a for-profit organization is engaging in any other program and also engaged in 16 broad eligible activities. So 16 broad eligible activities coverage shall be 60% of their total activities. And they should be qualified as eligible activities to the target population to be established through one or more following. One or more means they must be serving, their revenue should be at least 60% from serving the underserved or privileged population, or their expenditure should be more than 60% on this underserved or privileged population, or their customer base, their total customer base, out of which 67% must constitute this underserved or privileged population sector. So once we satisfy 1, 2, 3 conditions, then your NPO shall become social enterprise for the purpose of this regulation. Again, they have certain exclusions as well. And exclusions are the corporate foundations. They are not eligible to be SSA. The political or religious organization or activities, professional or trade associations, infrastructure and housing companies, except affordable housing, shall not be permissible as a social enterprise. That means corporate foundations are out. The political activities or organizations are out. Religious organizations are also not eligible to be called an SA. And they are saying religious activities means a mixed trust. Suppose an organization having charitable activity and also having some element of religious activity, I am of the understanding that that organization may also be not covered to eligible to become a social enterprise. So basically, we have understood what is social enterprise. It can be of any form, and then we have understood 3 conditions, and then what are the exclusions. Now over to Sandeep to take it forward.
Yeah, thank you, Suresh. If you could, yeah, thank you very much. Thank you for that presentation of the first part. I think that gives a lot of clarity in terms of how this whole thing is going to unfold. We have rest of the presentations to come, but I think it would be important to pick up some of the emerging issues that has come out of Mr. Kejriwal's presentation. The first thing, as you also mentioned, while defining the non-profit organization, it talks about Indian Charitable Trust, which is registered under Indian Trust Act 1882. So that would be a first question to Dr. Fogla. Does public charitable trust fall under the rim or the of Indian Trust Act 1882? Does it apply to public charitable trust?
No. It seems that it is a drafting error, because Indian Trust Act 1882, it is a common perceptions. Many people throughout the country believe that Indian Trust Act 1882 applies to public charitable trust as well. But the way the law has been drafted, specifically Indian Trust 1882 and other state statutes in India, except 2-3 states, the Charity Commissioner Mumbai, you have a Madhya Pradesh Trust Act, in Rajasthan you have a Trust Act, maybe there would be a couple of more states. Except these states, there is no regulation. Trusts are registered under, in India, trusts are not registered. Trust deed is registered. Trust deed is registered under the Registration Act 1908. In fact, there are decisions, and in Supreme Court, in certain decisions have held that a trust without an instrument, an unregistered trust, is also a valid organization eligible for 12A and FCRA registration. So in such circumstances, as this law stands right now, most of the trusts are ineligible, except in the state of Mumbai, Madhya Pradesh, Rajasthan, and maybe some other states where the Trust Act exists.
Yeah, thank you very much. I hope it is an anomaly and a drafting error, which would be corrected. Otherwise, large number of organizations who are registered as public charitable trust would be excluded. Which also brings me to the next question. While defining non-profit organizations and for-profit social enterprises, they have used more or less the same eligibility criteria. And as a legal expert who sort of works for both these sectors, do you think is it sustainable? Do you think it is fair to have similar eligibility criteria both for for-profit enterprises as well as non-profit organizations?
No, that again, it's for-profit and not for-profit are two mutually exclusive groups. Profit works for profit. And that is why we talk of social responsibility of a corporate. That is why we say that at least 2% should be used for charitable purposes. Remaining if you are working for your customers, shareholders, and other stakeholders. So for-profit organizations normally work for profit. If you give a larger definition, then they work for their stakeholders. But they are not supposed to work, or they are not expected to work for public charitable purposes. So it is not understood how a for-profit organization can work for the 16 charitable purposes mentioned in this stage. This, to my understanding, these rules are evolving and it has to change, because a for-profit organization as of now cannot become eligible as an SSC because 67% of its revenue or net profit have to be applied for public charitable purposes. So we have to see, we don't see such organizations in the country right now. So whether some new mechanism will be developed, whether the shareholders will forego their profit to create a for-profit organization. There are one or two instances long back in high courts where a private limited company set aside its profit. The shareholder forfeited their profit and they claimed 12-way registration, and Andhra Pradesh High Court allowed them 12-way registration. But these are exceptions under the current legal framework. I don't think it is sustainable that a for-profit organization and a charitable organization both will have similar objectives and both will be spending 67% on charitable purposes. Either we have to wait for the further clarifications and what they have envisaged, but from the structure and the rule which is available, I think it is not possible. But we have to wait for more clarification from SEBI.
Right. The primacy of social intent is what is said to be defining, and which also brings me to the question which is related to what I've asked just now, what you've responded already. Which does it mean that the existing corporate organization cannot or can claim to be a social enterprise? Because from you I gathered that in such case a new corporate needs to be constituted in order to fulfill this definition. Can an existing corporate claim to be a social enterprise?
That is what you have to understand, because a charitable organization has to apply each rupee for charitable purposes.
Right.
And a corporate will work for maximizing the wealth of the shareholders and the satisfaction of other stakeholders, whether they are employees, customers, or whoever. So how a corporate could be 2/3 of its operations, revenue, income be for charitable purposes? We don't have a structure. And for that matter, even before the statute, we were struggling to define what a social enterprise is, because many corporates claimed to be social enterprises initially, but in the long run, it was difficult. You can see, for instance, Amul is a cooperative society, so then it is working for the benefit of its members. It is working for the benefit of the shareholders. Incidentally, the shareholders are poor farmers, but it is working for its shareholders, its owners. But a corporate working for the benefit of society without giving control, without sharing profits, without sharing shareholding, it is a myth. It normally, we don't see long-term sustaining examples of such model. So I don't see corporates under the current law, the existing corporate claiming themselves to social enterprises. There might be some startups which have been registered for social causes, maybe for environment, for other current issues affecting the society. But to what extent they will be able to showcase this 67% eligibility, it has to be seen. On the face of it, it looks a non-starter for the existing corporates.
Right. I think that brings in a lot of clarity as well as confusion in terms of how it is, which also, one thing that they have excluded quite clearly, you mentioned about Amul. Does it mean that cooperative society cannot be categorized as social enterprise in this current definition that the SEBI has provided?
This law applies to companies and corporate organizations. So now, what is a corporate? Some statutes, ideally organizations like society and cooperative societies and normal societies, they don't have identity of their own. For example, a trust basically is an unregistered body. The trust deed is registered. Society is a registered but unincorporated body. That means it is not an artificial legal person. It has to be represented by its members or the board. And a company is a registered as well as incorporated body. So how a cooperative society will claim itself to be a body corporate? In some statute, it says that after registration, even society, for instance, Telangana Societies Act says that after registration, the society will be an incorporated body. So, but whether it actually becomes a body corporate, these things again has to be defined and clarified by SEBI. Under the normal law, most of these societies and cooperatives are not corporates. So we have to see the respective statutes. And so on the face of it, it is difficult for organizations other than corporates to claim eligibility.
Right, the definition of body corporate somehow seems to be excluding cooperative society, but which also makes me conscious of the fact that there are rest of the presentations to be made. So I would like to go back to Mr. Kejriwal to continue with your second part of the presentation, which is basically on registration requirements.
Thank you, Sandeep. So basically, in the first half, we have understood we have to either NPO or for-profit, and then we have to be a social enterprise conditions to be fulfilled. Now we have fulfilled the social enterprise condition and we have become social enterprise. What is now next? The next step is the registration, the requirement of registration. Now this notification says the NPO becoming a social enterprise, they can get registered with social stock exchange. And they can also get registered and raise funds, meaning thereby, normally in a stock exchange, only the securities are listed, but here for NPOs, they are allowing that they can get registered without raising any fund. So that means they can get registered and get registered without raising any fund from the stock exchange. So that provision is still there. But for the for-profit social enterprise, they have to be identified to be a social enterprise. As per to apply this provision, and they can raise fund. That means they are not required to be registered, but they should satisfy the SC conditions, all these 16 indicators and 67% activities and those things, and they should not be under the exclusion clause. So that if they are identified to be a social enterprise, they can raise funds without getting registration under social stock exchange. And this condition of SC condition, 3 conditions applies to both non-profit sector as well as to the profit social enterprise. Now, what is the requirement relating to registration of NPO? Because the for-profit social enterprise are not required to be registered. The registration is optional, but mandatory when funds are going to be raised. So first thing is that we can get registration, but it is mandatory when we want to raise funds. But even if without raising fund, we can get ourselves registered. And as we go on, we will find why registration is important for us, even we don't want to raise funds. The second is the NPO can choose to register without raising any fund, and the minimum requirement of registration shall be notified by the board. They have not yet notified. But when I see the working group committee report, so they have basically notified, they have basically specified the 3 years existence minimum level of program expenditure, income tax registration under section 12AB, and other number of 8-9 things. So I think those have still in the report level. They have not been notified, but those things are going to come to become eligible to register. That means any NGO, if not satisfying the eligibility requirement for registration, even if they are social enterprise, they will not be able to register under a stock exchange. And again, the stock exchange will also specify the conditions under which they are going to register. Now, this registration requirement also provides the ineligibility. When the NGO, though satisfy to be a social enterprise and though satisfy all the registration requirement, but in certain cases they will be ineligible to register or to raise funds. And what are those conditions? A social enterprise shall not be eligible to register or raise funds through a social stock exchange, as the case may be, if they fall under any of the following situations. If the social enterprise or any of its promoter group or any director or trustees are debarred from accessing the securities market by the court, or are a willful defaulter or a fraudulent borrower, or very, very important to understand, or has been debarred from carrying out of its activities or raising funds by the Ministry of Home Affairs or any other ministry of central government or state government or charitable commission or any other statutory bodies. So that means any organizations debarred from carrying out to raise funds by the Ministry of Home Affairs will also be not eligible to register and to register in the social stock exchange. And if any of its promoter or director or trustees is a fugitive economic offender and has been debarred from accessing the security market. So basically, once we are satisfied, once we have come under the social enterprise coverage, then we have NPO registered as NPO as social enterprise. They have to register. For registration, they have to follow certain conditions and they have to follow certain paperwork, and they will not be eligible to register if these conditions are applicable to them. Now over to Sandeep for discussing the emerging issues on this.
Yeah, thank you, Mr. Kejriwal. I think a couple of things that comes out, and I would also bring in Dr. Patra here. Is eligibility criteria is pretty clear, and as you said, some certain things are yet to be notified, and notification will come in terms of minimum requirement. But you've already mentioned what the task group committee report says. But let us wait and see what is going to come out. But in terms of ineligibility criteria, one thing that strikes out, and that is what I would like to ask Dr. Patra, is this issue of those organizations who have been debarred from carrying out this activity or raising funds by Ministry of Home Affairs. Does it mean that FCRA registered organizations whose registration has been cancelled or renewal has been denied will not be able to register themselves as social enterprise in the social stock exchange?
Yeah, I think so. I mean, we have taken a view in our technical group that this is the interpretation. It seems to be emerging from here that any FCRA registered organization which whose renewal has been denied or cancelled would not be eligible to register in the social stock exchange. That seems to be the interpretation emerging out of this notification.
Right, and something which is related to this, and Dr. Fogla, you can come in here, is the issue of common trustees. If there are trustees of a denied FCR registered organization and a new social enterprise or new other organization where the same trustee is one of the trustee, can such trust also not apply under social stock exchange?
I don't think if an organization has been denied FCRA renewal or registration, then if any of the board member of that particular organization is on the board of another organization, the denial of renewal to one organization in itself will not result in a denial to the other organization only because there is a common trustee. So I don't think there is anything. One has to see that the trustee itself has not been prosecuted, or because FCRA law applies to individuals also. Mm-hmm. So usually the trustee is under some kind of an FCRA denial bar or anything. Here we should also understand that under FCRA there is a barred category of people. That is the public servants, political people, they cannot receive FC fund. But in our opinion, even if such people are on the board of a charitable organization, that will not result in a disqualification to be eligible for a registration under SSC.
Right. I think that gives a bit of a clarity, but let us see how it unfolds. Now, Mr. Kejriwal while making his presentation, he said that Section 8 companies are excluded from the definition of for-profit enterprises, and they have been included as non-profit organization in terms of trust, societies, and Section 8 company. My question is, those Section 8 companies who have not availed or who have not taken 12 AB registration, will they qualify to be registered in the Social Stock Exchange or not?
No, a Section 8 company which has not taken 12 AB registration, or for that matter 1023C, the 12 AB is the terminology, is neither here nor there. It is not eligible as a for-profit, it is not eligible as a not-for-profit. But if you see social enterprise, a Section 8 company without 12A registration is likely to compete under the other category. But by keeping this for-profit segment, the social enterprise, otherwise in common parlance, a social enterprise can be a for-profit as well as not for-profit. So by dividing, the division should have been purely 12A type charitable organization and social enterprises, which might be registered as for-profit or not-profit, but who have a social purpose. That should have been the division. So currently, 12A Section 8 company without 12A registration, I don't think they will be eligible under either of the two categories.
Yeah, that would have sort of enlarged the canvas the way you explain if it would have been defined in that way, but unfortunately it is not. Since we are talking about exclusion, the exclusion is also on political and religious organizations. So my question is that there are some charitable organizations who also do, let us say, insignificant charitable activity. It is quite clear that religious organizations cannot be registered in SSC. But what about charitable organizations doing to some extent charitable religious activities? Will they also be barred from getting registered on the SSC?
Under the current rules, an organization having even if 1% of religious activity does not seem to be eligible to participate in the stock exchange. But this again should have been addressed in proper perspective. For instance, under income tax laws, up to 5% of religious activity is tolerated for a charitable organization for ATG registration. So currently they are not eligible, but maybe that part also needs to be looked at, and we are hopeful that this is a new law and it will evolve. So at least there is some beginning.
Right. And talking about exclusion, the third excluded group is corporate foundation. And that is something which is really confusing, because what is this corporate foundation? Who is a corporate foundation? So can you give a perspective to this aspect?
No, the corporate foundation, because now that is where one confusion. A foundation can be registered as a corporate, for instance, a Section 8 company. So, and a corporate foundation, so it is a kind of you have to imply in what context the word corporate foundation has been used. So the context in which the word corporate foundation has been used is not that a foundation is registered as a corporate, not as a society or as a trust, but in the context of either it is controlled or funded by corporates. So basically, the idea should have been that a large corporate who have floated their own charitable organization should be treated as a corporate foundation, either through control or the majority of the funding. But though no specific definition is available, the technical report seems to suggest that it will be based on funding. So suppose a charitable organization is dominantly funded by corporates, then maybe it will be treated as a corporate foundation. And if that is the interpretation, then it will create a lot of problem, because there are many genuine charities which access a CSR fund from various organizations. They don't work at the behest of the corporates, or they are not controlled by corporates. So this is again a very serious issue. A corporate foundation should be defined, ideally a foundation controlled by a particular group of corporate, or for a particular CSR activity of a particular conglomerate or a group of company, should be treated as a corporate foundation. If the interpretation is dominant funding by corporates, then many large charity will be debarred. So that as an emergency level, that has to also come to the fore.
Right, quite concerning, and I think let us go to the third bit of the presentation, which is basically looking at the funding. How will the funding happen? Mr. Kejriwal, over to you.
Thank you, Sandeep, and thank you, Manoj. Now, in the first presentation, we have discussed when can be a social enterprise, and then we discussed about the registration requirement. Now, we are social enterprise and we are registered with social science. What is the next step? The next step is funding. So, though fundings have been talked about a number of means of funding in the report, but we will, for today's discussion, we will be specific to what has been already been specified or laid down in the amendment law by the SEBI. So, means for fundraising, as specified already, they are saying for the NPOs, being a social enterprise, they can raise funds through zero coupon, zero principal in accordance with applicable provisions of Chapter 10A. They have provided what are the means and what all about on zero coupon, zero principal bond. Then they can also specify that donations through mutual fund can also be raised, but the scheme in this regard to be specified by the board. They have not specified. And then they are saying any other means as may be specified by the board. So basically, by today or by as of now, they have zero coupon, zero principal bond. They have already laid down all the processes. Donation through mutual fund, they have identified one of the possible source for NPOs, but the scheme has not been laid down, though talked about very much in their working group reports and those things. And for profit sector, social enterprise, they are saying equity is one of the mode, and the debt instrument is another mode, and any other means as may be specified by the board. So basically, for today's discussion, we shall be limiting ourselves to the zero coupon, zero principal bond, because this has already been laid down in by SEBI in Chapter 10A. So what is zero coupon, zero principal bond? It is to be issued by NPO registered with social exchange. That means this will not be issued by FPO. It is only NGOs who are registered with social exchange. They are eligible to raise funds through zero coupon, zero principal bond. These bonds are without any coupon. That means no interest payment has to be made, and no principal amount shall be payable on its maturity. That means basically it is a donation coupon, because neither you have to pay interest and nor you have to refund the amount. Okay, and that's why they are calling zero coupon, zero principal bond. These are issued for specific eligible development activities. That out of the 16 eligible activities, you have to make a project proposal, and based upon that proposal, you can raise funds through zero coupon, zero principal bond. And the tenure of this bond shall be the duration of the project period. Again, that means it is basically a restricted grant concept based upon the specific project proposal for a specific project period, and that has been converted into a zero coupon, zero principal bond. Now the principles have been provided, procedure has been provided for the public issue and the private placement. Now zero coupon, zero principal bond can be issued to the public, and also it can be placed privately, and the detailed process have been provided in 292K and 292L of the SEBI regulations. And they are saying in both the cases, you have to submit the fundraising document. Is specifying therein the informations already specified therein. You have to submit your information in a fundraising document, and with that, your stock exchange will approve that document, and then you can raise funds. What are other conditions? The zero coupon, zero principal instrument shall be issued in demat form, no fiscal certificate. The minimum size shall be rupees 1 crore. That means your project's size should be 1 crore or more. Minimum application size that can be invested by any public is 2 lakh. The minimum subscription required to be achieved shall be 75% of the fund proposed to be raised. Suppose you have submitted your budget proposal, zero coupon, zero principal bond for say 2 crore rupees, because 1 crore is the minimum, 2 crore rupees. So 75% of this fund has to be raised. That is 1,50,000. And if you are not receiving 75% of the funding, then in that case, the specific details can be provided by the issuer that how he can manage with the funds so far raised, or the amount has to be refunded back. That means if the 75% or is less, then you have to give the logical conclusion that why the less amount will be sufficient for implementing the program or achieving the goals, or otherwise you have to refund the amount being raised. And termination of this listing, when it will be delisted? It will delisted when the objects have been achieved for which the project was issued, or certificate to this effect submitted to the stock exchange. The object has been achieved and the certificate has been submitted to the stock exchange. Now the object has been achieved, or the project period expires. Suppose this was issued for 3 years and three years has expired. In that case, even it is not, the project is not achieved, this will be terminated. Now over to Sandeep for discussion on this issue.
Yes, thank you very much for the funding instruments that you talked about. We will focus more on the non-profit part, which is basically zero coupon, zero principal bond, but which also makes me wonder how is it different from a restricted grant, because there is no principal, there is no interest that is provided. So by and large, it appears to be like a restricted grant. Dr. Fogla, what is your interpretation? How is it different from a restricted grant?
No, it is clearly a restricted grant. If you see, a restricted grant was basically a bilateral contract. So the donor was allowed to fix conditions and there was no public disclosures and no public regulation attached to a restricted grant. So now this same restricted grant will be raised through a donor marketplace. If you have a 1 crore issue, up to minimum 1 and up to 50 donor can participate. 2 lakh rupees, 50 donor can give you 1 crore. 1 donor can give you 1 crore. And you, apart from your donor ruling, now these donor rulings have been streamlined by the government. You will be publicly accountable, public disclosures will apply. So the same restricted grant has been publicly regulated. So that is what it's coming out, and it is no way different from a thing, but it allows charitable organizations to put forth and access a wider audience. Normally, bigger NGOs, they would have contact with donors, they through PR, etc. They would raise funds. So the smaller and medium NGOs, at least on paper, should have more opportunity of accessing the donor market. But it is clearly a restricted grant received for specific purposes, to be utilized for those purposes, regulated by a particular statute, and reporting disclosure requirement accessible by everybody. So this is the structure, and it will be followed up with other regulation regarding impact. Impact can be separately sold, and all those things will be related. So how these instruments will be integrated in future, that we have to see. But this zero coupon bond standalone is clearly a modified and a technical version of the restricted grant one.
Yeah, thank you. Yes, it does widen the the avenue of fundraising. But what makes it a bit complicated is that they have defined zero coupon, zero principal bond as a security. And if it has been defined as a security, will it have an implication under ATG of income tax?
Those clarifications have to be given, because a security also can be given as donation. For instance, FCRA law applies. FCRA is contribution law, foreign contribution. That means foreign donation law. But it applies to currency, securities, and
article.
So Yeah, but the donation is termed as security. The security is not given as donation in case of zero coupon bond. So a security will have various other implications. So and even under ATG and other things. But because it is without any consideration and no consideration is flowing back to the donor, necessary clarifications have to come under the income tax and other statute that this is a security for technical purposes. It is not an asset class security as far as the charitable organization is concerned. So those clarifications have to come, and I think the corresponding amendments will come in the income tax FCRA and other statutes.
Yeah, since you talked about FCRA, something that I would like to ask is that if a foreign donor wants to invest through zero coupon, zero principal bond, does it mean that only a FCRA registered organization can receive it, and non-FCRA registered organization will be excluded out of this?
Yes, obviously, the FCRA law is very clear. Whatever route, you cannot receive money from foreigners without FC registration or prior permission. So let us see whether there will be an amendment or the central government will exercise its power under Section 50. So how they will bring about these changes. But it is very clear because it is a central statute. A foreigner cannot give a zero coupon to an organization not registered under FCR.
Yeah, it is mentioned about amending the speculative activity provision under FCRA. But let us look at the final part of the presentation. Sureshji, over to you. Then I would take up the questions from the participants. There are some questions are there.
Thank you, Sandeep, for letting me in again. So we have discussed what is social enterprise. We have discussed how it is going to be registered. And we also discussed what are the fundraising mechanisms available to them so far. Now, the last presentation comes, what are their obligations of reporting? Because when they are going to register, when they are going to raise funds, then there has to be some obligation of reporting. So what are those new obligations? So these are the disclosure by NPO registered with social stock exchanges. Now we have already discussed that NPO can be registered without fundraising and NPO can be registered with fundraising. So this disclosure requirement exclusively for NGOs who have not raised funds but are registered with social stock exchange. What they have to do, they have to give the annual disclosure of the matters to be specified by the board and matters to be specified by the social stock exchange on annual basis. That means these matters to be decided by them, and the NPO registered with social stock exchange, they have to submit the annual information to the stock exchange and to the board. Then they have to submit the social impact reporting. Social impact reporting means they have to submit an annual impact report audited by a social audit firm employing a social auditor, and the social stock exchange by other parameters that shall also be required to be submitted to the stock exchange. Meaning thereby, if you are not raising funds and you are only registered, that means you have passed filter 1, you have passed filter 2 of the registration requirement, and you are also engaged in disclosing your information with the stock exchange, and you are also engaged in giving social impact report. I understand this can be a tool for the new fundraising. If you are already registered with social exchange without raising fund, then also it may help you to raise funds from other agencies, because they may ask you, because they understand, because once you are registered, you have passed on so many filters, and you are also committed to make a social annual disclosures. Now the social auditor has been defined, means an individual registered with a self-regulatory body under the institute of ACI or such other agency as specified by the board, and has qualified the certificate program conducted by National Institute of Securities Market and holds a valid certificate. And the social audit firm means any entity who is employed the social auditor and has a track record of more than 3 years. So these are the disclosure requirement for the NPOs who are registered but not raising funds. But in case you are also want to raise funds, suppose you are want to raise from zero coupon, zero principal bond, then in addition to the first slide, you have to make additional disclosure. And what are those disclosures? You have to submit the statement of utilization of fund on a quarterly basis. Category-wise amount of money raised, category amount of money utilized, balance amount remaining unutilized, and the unutilized amount shall be kept in a separate bank account as per this reporting format. Again, it will come under the FCRA challenge, because under FCRA, because this fund can be received both from the FCRA and local sources, So unutilized amount cannot be in a separate bank account only for, then some notification has to come here. And this statement has to be given till the time that the tenure of that fund matures or ends. And the second requirement of disclosure is event-based intimation and disclosure. And any event that may have a material impact on the planned achievement of the output or outcome, as soon as possible, they have to inform to the stock exchange, not later than 7 days. And this keep on providing updates on this regular basis till the time the concerned event remains material, or once they becomes immaterial, they can stop funding. They can stop providing information. And such enterprise will also disclose all this information in their website. So additional to disclosures, if you are raising funds, is a statement of creation of fund and event-based disclosures. Now they have also amended this alternative investment funds, who are basically the social venture funds. The social venture fund now shall be called the social impact funds. And the social impact funds means alternative investment funds which invest primarily in securities, units, or partnership interests of the social venture. That means for SC funding, this social venture fund impact fund shall be created. And there will be social units, means units issued by the social impact funds. The social impact fund will be issuing the units, a scheme of a social impact funds to the investors who have agreed to receive only the social return or benefits and no financial return. Because here there is no return to the social investor. Their return is only the social return. And the social impact fund shall have a corpus of 5 crore. Earlier it was 20 crore. They have downsized this limit. And the social impact funds can accept investments from an investor not less than ₹1 crore. However, in the case of a retail investor, the minimum value of investment is reduced to ₹2 lakh. And the investment condition is the social impact fund can invest especially for the NPOs permitted to be raise funds in SC market. So there are certain amendments for the social impact funds. Now to sum up, the social stock exchange shall be a separate segment within the existing stock exchange. This is point number 1. Non-profit and profit sector to fulfill a specified condition to be classified as social enterprise. Then NPO classified as social enterprise needs to register and may or may not raise funds. So far, zero coupon, zero principal and donation through mutual fund are specified means for fundraising for NPOs and equity and debt instrument for profit enterprise. The NPO registered with social stock exchange without any fundraising needs to disclose specified information on annual basis and also need to submit audited impact report. Social venture fund shall be called as social impact funds. Now we are moving from implementation based funding to impact based funding, and more clarity will emerge when stock exchange will list their requirement, when income tax, Ministry of Home Affairs, MCA will bring necessary enabling provisions. Over to Sandeep to carry it forward.
Yeah, thank you very much. I think this gives a good perspective. At least, these are first impression in terms of what has been notified. I think there are many areas that needs further clarification. And now I would like to pick up some of the questions that have come from the participant side, looking at the time. Well, some of the questions that I've seen have already been responded during our course of our discussion, but some of them I would like to pick up. One very, simple, straightforward question, Mr. Kejriwal. As you know that recently the CSR exchange portal was also introduced by the Ministry of Corporate Affairs. The question is that is it related? Is social stock exchange related to this portal that was released by the MCA?
These two are two different things. The CSR portal is enabling the CSR fundraising. Right. And they are bringing together the CSR donor and CSR implementing agencies in one platform.
Right. So these two are different things. Social stock exchange still yet is on paper, I would say. It has not been operationalized yet. The other important question that I've come across, Dr. Fogla, is what about mother NGOs for that matter? Can mother NGOs raise funds through this zero coupon, zero principal bond scheme and get the program implemented through subgrant? Is subgranting possible out of zero coupon, zero principal bond of fundraising?
Unlike FCRA, we don't see a specific exclusion of subgranting, and when in large program, organizations play complementing roles. So it is not expected that the same organization will play the same type of role. So ideally, large organization should hold that program and as a part of its implementation, other organizations can participate. But we cannot say it with 100% clarity, because one thing is for certain: to access the money, even downstream, a registration under SSC would be required. As we discussed earlier, that all charitable organizations should be registered under SSC. Maybe that could be one of the purpose. That could be one of the purpose of getting all organizations registered under SSC, even if they are not accessing fund directly. That could be the purpose. So what we understand, the organization at least should be registered with SSC, and this mother NGO probably should not be a platform, pass-through platform. It should hold the program, because it itself should claim those 16 objectives, social primacy. So these are the issues which would be relevant. The platform which itself is not claiming the primacy, maybe if the social exchange, stock exchange does not seem to be promoting those kind of structure the way they have defined the eligibility. Suresh,
The only issue also will be FCRA, because if part of the money comes from FCRA, then FCRA prohibits subgranting. So that also needs to be addressed probably at some stage.
Gets further complicated if foreign donors are also part of the funding. But what I would like to ask Mr. Kejriwal related to this is, can such mother NGOs have? There is another instrument called Social Impact Fund. Can mother NGOs create a social impact fund to raise funds and get it implemented through implementing agencies, if not through zero coupon, zero principal bond?
Basically, I don't think any of the constitution document of the NPOs allows them to constitute the social impact funds. That altogether different legal framework. And the existing NPOs, I think, may not be a social impact fund category holder. But as Manoj was discussing, whether can be a mother NGO for implementing program. I think I have my doubt, because the funds are raised based upon the credentials of the mother NGOs. So other NGOs, if they want to the benefit of that fund, there has to be social enterprise must. Without that, though, this fund cannot be passed. And we have to see and wait and watch the affidavits and the undertakings we have to give at the time of fundraising document. They will be restricting for the subgranting.
Right. Thank you. I think that gives a bit. Then there are some very basic questions, like, for example, there is a question that are societies registered under Tamil Nadu's Societies Registration Act eligible to be defined as NPO under Social Stock Exchange, or for that matter any State Societies Registration Act, because it is mentioned Societies Registration Act 1860. So does it mean that State Societies Registration Act would not apply?
It will apply, because that is a concurrent law. So even if there is a state statute, it is under that 1860 Act only. So both Act will apply.
The other question is that can a foreign company, or let's say a subsidiary of a foreign company, register as a social enterprise in India under the for-profit enterprise model?
No, in India, technically, except for FCRA, there are case laws which says that a charitable organization can be 100% controlled by foreigners, but it will still be an Indian charity. So the control normally would not create a disqualification from being an Indian entity. So unless there are specific bars under general law, there is no bar. Any organization registered in India, whether controlled by Indians or others, should be eligible. But as we go along and we get documents, IPOs, documents, etc., so there might be, as Suresh just said, that we have to see that the further restriction and conditions may come to the fore once we get the specific procedures on place. So that we have to see. But on the face of it, no bar.
But Sandeep, intent seems to include them. Now they have to bring amendment in FEMA and FCRA, those things. But the intent seems to be include them, because they have included company and body corporate in the operating definition. And body corporate includes a foreign company. So basically the intent is to include, but how the other legal framework will allow them, let us wait and watch how the things are unfolding.
Right. I think this has been answered, but even then, will the donors be getting 100% deduction for investing in zero coupon, zero principal bond is likely to be amended?
We have to wait for income tax framework for this.
Even Dr. Fogla already mentioned about this. Yeah, I think by and large, these were the questions that have come up. Others are very basic and most of them have already been responded to during the course of our discussion. Unless there is anything that any of the panelists have noted from the question chat box, because I don't find any other question that needs to be raised, because most of it has already been responded what has been asked for. Any last words to my panelists? Anything you would like to say? Any of you?
Let's prepare ourselves for the exciting times.
Let us
Challenging times in terms of changing instruments, changing dimension of instrument. We will never conceptualize what those documents can be there for raise funds.
Yeah, kudos to the government in that sense to come up with a landmark legislation like this and to already notify, and many instruments would be notified in future, because there are many other instruments that have been provided by the working group and by the task group, and possibly the fundraising landscape in India is going to change in a big way once this becomes operational. Early days, a lot of positive signs. There are confusion, clarifications are needed. We are here to interpret what comes out, and we hope to continue our interpretation and engaging with all of you participants. Thank you for joining us as always, and we'll continue to hold such webinars in future also and bring clarity to complex matters as we have always been doing. Have a good evening and goodbye. Thank you very much.